All right, what's up, guys? How you guys doing tonight? Huge week ahead of us. I hope y'all are excited. I don't know if I'm going to be able to sleep. I feel like it's the night before Christmas because shiz is about to go down, right? The market is getting ready to get a ton of data that it's waiting for. We still have uncertainty after this data. GDP, just earnings, right? You get part of the big seven, as they would call it. So what are we going to get into? I'm going to get into some charts with you guys. I'm going to show you guys something. I'm going to show you two things. One, you're going to wait for a little bit later in the stream because as we go through these charts, we're going to get to it. But I want to take you guys back to Powell. I'm going to take you back to Powell because I feel like there was some information that was said that's a bit misleading. And I want you guys to see this. Because the thing is, if you don't know about this, you're not going to be able to track the markets like you should, right? And start thinking like, okay, we're out of the woods. Let's just say, what was it? November 14th, 17th, 14th, I think. November 14th is when the debt ceiling is like back up for grabs where they have to figure it out. Not sure why that's up. So this is it right here. Okay. No. Oh goodness. So this is what happens when this is what happens when you start things and you just go with it. So first off, if we could hit that like button, subscribe if you haven't already done so. We greatly appreciate it. But what we do appreciate is by you doing that, that will allow someone else that would like to be here find this stream. All right? That's the whole sole purpose of what we do here, right? The sole purpose of what we do here, it's free, right? I do my best to make this stuff free. What do? We trade live. We trade live Monday through Friday, 6:30, 7:30 to 4 p.m. in the afternoon, East Coast Standard Time. We go over the news, right? We collectively as a group say, where do we want to be today? What type of trades do we want to take, right? Is there a trade, right? Having many people, having a group of people allows you to be able to capitalize off of movements that you may not know that's going on, right? Relative strength. Maybe a bit of news came out and it just hasn't hit your scanner yet and someone gets it first. All those things. So hitting that like button, subscribing, sharing. Subscribing also will let you know, hitting that notification bell when we go live. Today, I had to give my little girl her medicine and she went and hid and she just was, being a cat. Had to give her a few steroids for, just the seasonality, runny eyes, itchy a little bit. But the steroids seem to help, so we gave her a small dose of that. Again, prescribed by a veterinarian, which she's going to go back to. But anyway, like, share, and subscribe. We greatly appreciate it. Others will too, for them finding this stream, right? We go through a lot of valuable stuff, right? We not only do news, trading, and stuff like that, but we also go back and we work, right? And see, okay, we're having a bit of issues. Maybe is it us? Is it the market changing? What is it? I had a pretty good day Friday. I was a little frustrated because I had a doctor's appointment. I cut the stream off, and then I realized psychologically, I'm like, man, this streaming and going live kind of messes with me, and it's something I'll get used to, but it's all good. I think I traded 4 or 5 times Friday. There was a small, which I can go into that, right? We'll go into the AMD trade, and I'm going to give you guys a lesson on that, on why exactly I did not take it. Because my game plan was more so not a scalp, right? You want to have a game plan. Is it a scalp? Is it a swing? Is it a day trade? Like, what is it that you're expecting out of it? Is it a news catalyst? Is it a technical setup? Is it a news catalyst with a technical setup? Right? And that's the thing. I should have turned the mic off. Sorry about that. Earnings. Earnings is a big one, right? This is why it's going to be hard for me to sleep because when you have earnings like this and coming into an environment with as much uncertainty added on, what's going on around the world, right? Makes it, and what's good, not even, we have earnings, right? We've been in an interest rate cycle where we have practically raised the higher for longer. We've raised rates, the Fed has raised rates so quick. That's one. Right? 2, we don't know what's going on with this government situation. They have to come to, like, this was only a timeline. They have to come to an agreement here in November. Second week in November. I want to say, don't quote me. You can always Google it. It's like the 14th or the 17th. That's coming up. We don't have a speaker for the House. What's the other one? We have, geopolitical things going on around the world that's very sad, right? That there's two different type of wars going on right now, and then earnings. Like what does guidance? What happens with earnings? So with earnings, I love earnings season in particular because opportunity is when big buyers and big sellers are in the market, right? And that's liquidity, that is opportunity that we need to take advantage of. And we need to dot our I's and cross our T's and be ready for that. We need to put ourselves in that right place, right? We need to put ourselves in the right trade. But putting ourselves in the right trade is just the first part, right? Understanding very quickly, not spending a whole day like, okay, well, this was Q1, this is Q2, this was their Q3. Like, how does it perfect? No. All right, we can basically say year end, are they raising, lowering guidance? How was earnings, right? EPS, revenue, right? A drop in revenue, but they come out and say, we're going to just keep our, like a slight forecast higher for guidance for year end. But we may, revenue may be brought down, but we also as a company can lower our margins and still be able to get that EPS, right? That earnings per share. So just because revenue is down, right, you want to kind of look to see what they say and what really is going on. So, but again, this, long story short, this allows us to have so much opportunity. And then you add on all the other stuff that's going on, can make for a really great day. And if you manage your risk correctly, and if if you're new for trading, you can go ahead and throw questions in the chat now. I've been doing this for close to 10 years now. I'm very good at, being able to call market direction and putting myself in the right place at the right time. I would like to think that I'm pretty good, but I think that there's always work to be done, right? I'm not here to say I'm the best in the world. I will always try to be the best in the world, right? That's what you got to strive for. And with that, again, you got to train yourself like an athlete, right? You got to train yourself like an athlete. You got to watch tape, right? Watch yourself perform. How, like the prior weeks, did you take a good trade with a bad trade, managing your risk and seeing where you went wrong, right? So you can see you in the act, in the moment, really does help you see where your strengths and your weaknesses are. Don't make trading over complicated. I know a lot of people like to throw a lot of different lines on their charts, you just got squiggly trend lines all over the place. Like, listen, you got your support resistance, you have an uptrend. Don't go against the tide. That's number one. You want to trade before earnings. Worry about how much you're going to lose and not how much you're going to make. Because if you're trading before earnings, especially just buying high IV options, you're more worried about how much you're going to make. You're not worried about how much you're wrong. You're just hoping to be able to catch a big movement, right? Now, you got to have some thought process. You got to have some research behind if you're going to do something like that. I don't suggest it at all. I don't do it. I wait for day two continuation or reversals. I wait for that day two liquidity. Because the day two, again, is going to bring in really big buyers and really big sellers, right? If the catalyst or that earnings is actually going to move this stock. You want to do your research and put yourself in a position where this sector could be hit. Could be. Again, you don't know. It's a guess. It's a bet. If you're really worried about how much you're going to lose instead of how much you're going to make, you would probably be more so focused on spreads, and I would suggest that if you're going to do anything. If you don't have the capital for it, stop playing options, right? Not stop playing options in whole. You need to know what they are, first off. Second, stop making random guesses on if a company is going to do good or bad. Yes, the chart can help you, right? The chart can help you and kind of tell. Last quarter, we said it here, right? There were so many stocks that we called. We're like, if we had to go by this chart, this is a bearish setup. They're selling it into the earnings. Earnings came out. They continued the selling. They got ahead of it. All right. I haven't really seen that just yet. I've went through a few. I haven't. I just the many that I've went through. I just don't see it like I seen last quarter. Right? I didn't. I don't see that early sell off or that early buying before the earnings release to give you an indication on what the street feels like it is going to happen. Give me 1 second. The little girl that just got her medicine walked in. I gotta shut this door. Let's play this though. We're gonna play this. So I want you guys to see something. Thank you guys again for joining us. If you don't know, I'm Justin, by the way. Thank you guys. We do trade live Monday through Friday, 7:30 to 4. We're gonna be on tomorrow morning, about 6:30, 7 o'clock. So come join us. If you subscribe, like, we greatly appreciate it. Again, it does help other people find the stream that would like to come here, put in the work, come up with ideas, make some money, manage risk. So this here, now I'm lucky because I didn't think about this. Now what I'm about to show you is something I've showed with members. All right. Since SVB, the Fed has put in a backstop to provide liquidity, basically, right? So that these banks don't have to sell these bonds at a loss. Let's listen to this, and I'm going to show you a chart that you want to pay attention to, because after everything is said and done, the banks are not out of the woods, but they are, because the government has their back. Let's listen to this.
Which is the banking
It
system.
may be loud.
Last March, we had something of a scare because of, I guess, interest rate risk with Silicon Valley Bank and then some others. Are we through that now? Where are we in that process? Are you resting easy?
It really wasn't about the Phillips
one more
curve.
time.
It was more about constrained supply and demand more broadly, especially for goods at the beginning.
Let's turn to another responsibility of yours, which is the banking system. Last March, we had something of a scare because of, I guess, interest rate risk with Silicon Valley Bank and then some others. Are we through that now? Where are we in that process? Are you resting easy?
So what you pay us for is not to rest easy. We don't do that. But I would say where we are is this, though. Things have certainly settled down, we see the funding markets is fine. We see, and we paid a lot of attention to banks that looked anything like the banks that had the problems, and made sure that they had credible liquidity plans and plenty of liquidity and all of that. And so I think all of that has worked. And we set up this facility that's available for banks to borrow. And so all of that has led to a real settling down. But our job is to be on the case, and we're still on the case, and we'll keep after that. Banks are generally very well capitalized and highly liquid in our country. Banks are strong. We benefit from all those years of reform under Dodd-Frank and Basel III that we went through.
Very true. Very true. So I want you guys to hear something.
Right.
I want you guys to hear something one more time.
And so we benefit from a very strong, well-capitalized.
Another responsibility of yours, which is the banking.
So there are no more cars.
Car
production went down. How do you solve that problem? Prices just go way up for cars. That's how you clear the market. So that's a classic example of what happened here. It really wasn't about the Phillips curve. It was more about constrained supply and demand more broadly, especially for goods at the beginning.
Let's turn to another responsibility of yours, which is the banking system. Last March, we had something of a scare because of, I guess, interest rate risk with Silicon Valley Bank and then some others. Are we through that now? Where are we in that process?
Are we through that now?
Resting easy?
Where are we?
So what you pay us for is not to rest easy. We don't do that. But I would say where we are is this, though. Things have certainly settled down.
They settled down.
We see the funding markets is fine. We see, and we paid a lot of attention to banks that looked anything like the banks that had the problems, and made sure that they had credible liquidity plans and plenty of liquidity and all of that. And so I think all of that has worked. And we set up this facility that's available for banks to borrow. And so all of that has led to a real settling down. But our job is to be on the case, and we're still on the case.
He didn't answer it. He didn't say if they were okay or not.
After that, banks are generally very well capitalized.
Banks are very well capitalized. Well, you're right. They are. Because this is the only thing the Fed and the government has their hands in right now. Okay? So I'm going to show you guys something. And what I'm going to show you is a chart of the liquidity that the government is giving them. Now, obviously, we want to see that chart kind of fall off or just stabilize. And, you know, if things are well, we shouldn't have to increase that amount, correct? If things were kind of okay, led to believe here. Like, he asked a question, how are banks and where are we in that process? He kind of didn't answer it. I could let it play through if you guys would like to. Let's look at that. So here is the liquidity and credit facility from the Fed. So if we noticed here, now 2 weeks ago, I told you guys that you've seen a rise. Now I'm a little bit ahead. This was last Wednesday from 107,665 jumped to just under 109. Okay, you had a slight pullback. That's this Wednesday. This latest one here at 108,818 from 884, which isn't a much, but it is with upticks. You're going to have drawdowns. There's still issues with the banking with banks. Let's not, right? The bigger ones, the banks have came in, a lot of them, decent earnings. But I want to see how high this continues to go. Because the banks aren't okay. The Fed should not be providing liquidity if the banks are okay. It's as simple as that. The banks are not out of the woods. Keep that in your mind. What happened Friday? Let's go to KRE. All right, here's the other part to that you did not hear from anyone else on YouTube anyway. Maybe if you did, God bless them. I hope you did. So this was the biggest, Friday was the biggest down day in regional banks since back at the SVB crisis, and it was down 4%. Even more so if you want to count in after hours. And on a two-day basis, from high to low, I'll go to the close, because that's only fair, right? Roughly. Of course, I got to do it from the bottom, right? Of course. So, the only way, so there's an 8% drawdown. So you had that Thursday and Friday. A nice drawdown there. So this is why you're still seeing no one step in and start buying regionals. They will nibble when it gets to certain prices, because that is a way to manage risk. Like, you're buying things distressed when nobody wants them, and nibbling on lows, you know, on a 10-year basis, a 5-year basis, should pay off, right? If you want to think about institutional money flow, they look at things from a 5-year, 10-year, you know, basis and what their possible return is. Okay. So when we say that the Fed is, you know, stepping out of this, you know, walking down the balance sheet, not providing liquidity, well, they're providing liquidity to the banks. Right? They're providing liquidity to the banks, and you see that with that chart. If you want me to pull it up for you again, it's right here. You guys can look it up for yourself. You need to watch this, because if it just continues and continues to rise and rise and rise and rise, it's showing you that there is still trouble in the banking system. Here is the kicker. What happened last week? Just so you know, this data comes out every Wednesday. Last Thursday. After that big hike, what did you get last Thursday that everybody was talking about? I'm going to show you. Because bonds don't just rise and have a bad bond auction for nothing. There is a cause and effect. You had that information from the banks, which you started to see a drawback in banks, like things were okay, and then a nice decent uptick in that data point. And that next day, when you got the 30-year bond auction, that told you banks weren't okay. You got that 30-year bond auction that came in, or was it the 20-year? The 20 years or 30-year last Wednesday, when everybody was all up in a scare over that bond auction. Okay? So keep that in your back pockets. Okay? Keep that in your back pockets. They're still ripping and roaring. Okay? Where's that? Right? Today is the 20th. It's right here. Right? Was it the 12th on Thursday? That was it. Right? That was it. And what happened here? This is when the data came out. This was the bond auction. Bang. So things are not okay in the banks. right? And for Jay Powell to act like everything is okay. Yeah, things are okay because the Fed's providing liquidity. And there's nothing wrong with that, right? They're doing their job. That's what their job is. But it's telling us, like, hey, if the Fed isn't here, and how far can the Fed go? I guess they can just draw down their balance sheet, and just whatever they draw down off their balance sheet goes right back to the banks anyway. So are they drawing off of their balance sheet? We could do the math, right? That's one thing we could do. We're going to get into charts. I just wanted to tie those pieces to you if you are just tuning into this channel, that this is why you had that bond auction last week. Not last week, but 2 weeks ago. That Thursday 30-year bond auction come in, and it was pretty bad. The bond auctions have been pretty bad because banks are still not equipped with liquidity, and there are still issues in the banking system, plain and simple. All right. Earnings. Let's get into earnings. We'll go into the market. We're getting a ton of data this week, guys. The market's going to find out a little bit about a lot of things, and it's going to come towards the end of the week. But there are some things in the country, other countries, that I do want you guys to see. But I also want to show you guys something else. There's a lot I want to show you guys tonight. Let's go to Euro USD. All right, we do have a bit of divergence here with a 38.2 fib. So if this can rise, it looks like a bear flag, right? Does this look like a bear flag to you? Right? I'm sure it does. You have negative divergence on the daily chart. You're okay. Come here. You're okay. I'm sorry. This is just my life. I wouldn't change it for nothing. My little girl is yelling at me because she wants to come up on the desk. So, I apologize. So, negative divergence, Euro USD. If we could get this to rise, because this is going to be important. So we have a bit of an inflection point here. All right. You can see here I've drawn a Fibonacci retracement. Let's see if we can get a bounce to that 38.2. Now, if the dollar is able to pull back, I don't necessarily still think that that's good for equities. It might be good for gold and oil, more so gold and silver, right? But there is so much more uncertainty other than currency at the moment between war. Like, you don't know if this debt ceiling is going to get resolved or not. So as you can see here, if you can't see it, I will scan it in. All right, you have some negative divergence on the Euro USD. What do you get this week? You have interest rate decision for the European Central Bank. Okay, let's just go through the data real quick together, and then we're going to go right into charts. If you guys could, do me a solid. Hit the like button. Subscribe if you haven't already done so. S&P Global, PMI, let's see here. 2-year note auction, Richmond Fed, services and manufacturing. But I want to go to, so we have Bank of Canada, rate decision and monetary policy report. And then we also have Powell after at 4:30. Again, the Fed's getting ready to go into their quiet period, so you're going to start getting the Fed is going to really come out and start talking, because that's the last you're going to hear of them for about a month. So Thursday is when things really kick off, but we have earnings, so there are trade opportunities other than overall market catalysts. In ECB interest rate decision, how do they dictate the interest rate with what's going on around the world? All right. So does this help the euro? Does this help the US dollar? Right? Does that help pull it back a bit? Because the US dollar has been in a range. Okay. The US dollar has been sitting in a range for quite some time now. Really since September, the end of September, and the majority of this month. It's just been sitting here. So I feel like it's waiting for some data to come out that we're going to get this week to say, hey, am I going higher? Am I going lower? Now, I don't, because there's so much I want to get through. We have GDP, and I'm going to show you guys a chart of GDP. I'm going to show you guys a lot of good stuff to help make you a smarter trader and a smarter, just understanding a lot of the things that are going on, and be able to dictate for yourself, the overall sentiment. At the end of the day, you want to soft landing, hard landing bucket, right? You want to throw them quarters in, throw a coin in for each data point that comes out bad, each data point that comes out good. that makes the case for a soft landing, right? Because we don't know, we haven't landed yet. We're still in the air. So that ECB interest rate decision, there's a couple other data points that I'm going to look at, but for the United States, the obvious ones, durable goods, GDP growth, and we're still going to watch this initial jobless claims. I think at the forefront of everything, the initial jobless claims and the labor market is still the number one factor the Fed's worried about. We got it at Jackson Hole. We got that. We got the labor market talk from all the Fed members. We're still getting the labor market talk. They would like to get this labor market to cool a bit to be able to slow down the demand for things. All right. Big data for the Fed, PCE. Again, this comes out Friday. We get PCE. You have retail inventory, initial jobless claims. Wow, core PCE, quarter over quarter, countless jobless claims, wholesale inventories, retail inventories, initial jobless claims, goods trade balance. We're going to get a lot of data this week. PCE prices, ECB conference, blah, blah, blah. But I know it's Friday where we get our PCE index year over year and month over month. So there's your PCE data that the Fed goes off of, the inflation data. So we're going to get inflation data. We're going to get, which every Thursday we get initial jobless claims. But you got GDP, inflation data. You're going to get consumer sentiment. There's another big one now. 5-year inflation expectation. But there's another key one. There's another key data point we're going to get, and that's going to be consumer spending, and which is going to be a big tell on how things were currently last month. Again, a lot of this data is, you guys got to remember when data come out, when these data points come out, this is looking into the past, not the future, right? I know we get some type of unless I read it wrong, Chicago Fed consumer confidence. Let's see here. I just want to make sure that I'm not wrong here. S&P. All right. 30-year mortgage, new home sales. So you're going to get new home sales. All right. Fed chair. That's Wednesday afternoon after the market closes. Durable goods. Durable good orders, retail inventory, continuing jobless claims, GDP sales, jobless claims, 4-week average PCE, consumer spending. There it is, real consumer spending quarter over quarter, and then Fed Waller. Pending home sales, month over month, year over year. So there is your consumer spending. I'm really curious to see what this data comes in at. Where am we at? I already lost it. Okay, real consumer spending Q3. All right. I want to show you guys something because you guys see how a lot of people are surprised when GDP is continuing to be on the rise. Well, I have a few data points for you that I think would help not be so surprised, because I feel like a lot of people don't do their research, right? And maybe they just don't have some of the things that I have on file here, but let's bring this up. And I brought it up a lot, I feel like. Let's go through here. I know I'm going through my personal things. It's all good. I got nothing to hide. Right here. All right. So let's cross this off. Let's click this. And let's do that. All right. So what do we have here? This is GDP along with interest rate hike cycles. It's hard to say that fast. So anyway, if you just look at this, your average 3.5 2 years prior. During the rate hike cycle, 5.3. 2 years after the rate hike cycle, 1.6. This is your quantitative easing and your quantitative tightening, right? Going from one to the other, one to the other, one to the other. Because now the Fed's going to cut and try to get this GDP number back up to get the economy going. And then after they do that, they go back and cut rates, right? They raise rates and then they cut them. They raise them, they cut them. Technically, you don't want to just live off of that for a while. You want to have a nice, stable long period of growth where you're not having to raise at such a rate that they have, obviously. But what a mess that we're in. I tell you what a mess that we're in. So if you guys take a look at this just for what it is, like let's look at March 1983 and August 1984, okay? 2 years prior, 0.6. 2 years prior, so therefore the Fed reducing rates. Don't know about adding liquidity on all that fun stuff. All right. During the cycle, okay, as rates are rising, whether you're coming to the end, the middle, 8.5. Okay. 2 years afterwards is when this is showing you the lag effect. In general, this is showing you the lag effect. So when you continue to see people talk about GDP still rising, guys, we just started the rate hike cycles, 12 months ago to a year and a half ago? Like, it hasn't taken much time because you've went so far so quick. Yes, but again, quick, right? 2021, middle of 2021, end of 2021, right? So if we went through 1 full year, almost 2. So we were about a year and a half, right? We're about a year and a half from when we really started getting into that, where rates were higher. So this just shows you the lag effect, right? And we got to remember the liquidity that is been given out by the government for money that is able to be used at later dates, right? So yes, there's a ton of liquidity, which is kind of saving everyone's ass right now at the moment. The Fed's hanging out with the banks because if they go, which they should let some of them go, they should just let things happen so we can get it over with and move on from this. The longer the Fed sticks around, the longer we're going to be in this situation. But guess what? That's okay, because as a trader, we make money off of volatility. And if there's going to be continued uncertainty about a recession or no recession, right? Volatility. Therefore, we are able to capitalize off that volatility because that is what gives us price movements that we look forward to, up or down. Even if the market trades sideways, but up and down, we will be able to take advantage of that. If you guys could, if you're new here, give us a like, subscribe if you haven't already done so. It really helps the stream out, really helps someone else find the stream that would like to be here. So this is some information that I showed you guys. Let's get into some earnings. So again, when you hear people talk about, oh, GDP's up, like soft landing, GDP. No, this is normal. We have not given enough time. There's more data that I could show you guys if you guys want it. We have done the research and looked, right? More than 4 times. About 4 times, right? You see, the 60s and 70s was a little trickery because they're just raising, lowering. So it's like, it's really up and down type of data. If you want to look at 2020, 2019, 2008, 2000, and what was it, like 86? And in the 80s. From the last rate hike, an average of 12 to 14, 12, I'm going to say just 12 months. An average of 12 months from the last rate hike is when the unemployment really started to tick up. That could be like next fall, right? We just got done raising rates. If you want to say how do you figure out like roughly an estimate, you have to do your own research and work. Again, this is not financial advice, but these are some of the things that I do. If you want to find out how many more, like, has the economy felt any rate hikes? And if it has felt rate hikes, to what extent? Has it felt 2, 3, 4? Have we felt it all? Obviously not. How I like to look at it, how I've been told to look at it, go back, if you think the lag effect is 18 months, go back 18 months. Where were rates? Okay, where were Fed funds rate 18 months ago from today? Let's just say they were at 2% and we're at 5.5 now. Then therefore, right, you should have 3.5 left to go. Right, you have 3.5% of rate hikes still to filter through the system. Let's get into some charts. Sorry about that. We have a lot to look at. All right, gold, oil, earnings. Let's start with earnings. Spotify. Let's go through these real quick. All right, so we have a ton of stuff, right? Data, earnings, uncertainty with two wars that are going on. And then we have GOP. We have no speaker for the House, guys. Just opportunity galore. I don't know how I'm going to sleep tonight. For anybody here that's new, thank you for joining us. Just all we ask is hit that like and subscribe button. All right, Monday, we don't have much. Cleveland Cliffs, CLF, Cleveland Cliffs. Wow, after the bell. Phillips on Monday, Dynamic Capital Incorporated. Monday after the bell again, you have Cleveland Cliffs, Whirlpool, Logitech. Not too many names that is that Crown Castle? I'm not sure if that's Crown Castle or not. Monday afternoon. So Tuesday, Coca-Cola, GM. So you're going to get GM and Ford earnings coming up, and we're going to be able to see their insight on what's going on with this strike. This is also to remember, because there's still something I'm going to show you guys later on in this stream, that if you don't know, what happens is like there's a lot of things that professional money managers use and look at to dictate what goes on. You've probably heard about copper, this and that. I don't really think that could have that much bearing. I'm sure it does, but there is a sector that kind of will give you the whole broader sector on how things are going or expected to go, right? How traders and market participants are taking this sector because of what they think of the overall broad markets. General Motors, Raytheon Technologies, we got two wars going on again. How many times do I have to say that? I'm not sure. Verizon, you can look at Verizon. Where there's Verizon, there's credit, right? Where there's Verizon, there's credit. Spotify, General Electric, 3M. I'd like to hear from 3M, Dow, NextEra Energy, Tech, DHR. I thought that's Dunheimer. I don't know why I thought it was D.R. Horton, Barclays, Sherwin-Williams. We have Pacific, PacWest, Regional Bank. All right. So let's go into it. Another credit one, Visa. Now this is going to be Tuesday after the bell. Microsoft, Visa, Texas Instruments, Chubb, CNI, Wastemasters, Snap. All right. I have some stuff I'm going to read off to you guys too we're going to get a lot of technology and information this week. All right. Technology and information is a big part of the S&Ps. All right. Boeing, it's gotten hammered. Let's see what they say. We've seen how airlines came in, was a miss, this and that. I think American Airlines beat. They missed on bottom, or they beat bottom line, missed top line. I can't remember, but it was a miss for the most part. The airlines missed. Vertiv, VRT, ADP, Hess, Hilton, CME Group, Moody's, Roper, Otis, Thermo Fisher. I think Thermo Fisher had a price upgrade last week and did pretty well Thursday or Friday. At least tried to earlier in the week. Another one that I want to see that I haven't looked at yet on the chart, ServiceNow. And again, this is going to be Wednesday after the close. Meta, right? I've already told you. Microsoft, Coca-Cola, GM, Visa. A lot of big boys coming out. Huge week for the markets. Meta, IBM, ServiceNow. What else do we have? Align, Mattel, Baker Hughes. And what we want to see is their guidance on year end, right? Because Christmas time is really, that Q1 of next year is really like, how do they think the season's going to go? How do they think, Thanksgiving and Christmas is going to go? This is where they should be bringing in the most of their money. We have a tight labor market. They shouldn't have issues, but we have consumer spending data, so we could probably tie that in for ourselves, right? This is what I'm trying to get you guys to look at. Knowing consumer spending, knowing Christmas is coming around the corner. If you start seeing a slow in consumer spending, you kind of can see how that's going to go. All right, so we went through that. Meta, IBM, ServiceNow, some big names. UPS is one that I'm going to show you guys. It has to do with a sector that I want to show you guys. Amazon, Intel, Ford, Enphase, Southwest, Royal Caribbean. You know what? A lot of people may not know this, but year to date, if you would have bought Royal Caribbean you would have been up over 150% on the stock alone year end. I'll have to go back and show you guys that. The cruise lines absolutely ripped, and not one single soul that I have seen, CNBC, YouTube, I don't use TikTok, but where I have not heard one person make the statement that, man, uh, cruise liners have had an outperformance, just unfathomable type of year, guys. I'm telling you, 150% on the stock is pretty damn big on the year, right? They've pulled back since then, but they have definitely completely outperformed, tripled the market. Overstock, Northrop Grumman, Harley Davidson, Hershey, Hertz, Honeywell, a lot of H's are coming in, Hasbro, Amazon, Intel, Ford, Enphase, Vail, that's another stock I'm going to look at, U.S. Steel, Chipotle, Skechers, Capital One, Colgate, Exxon, Chevron, getting some energy names at the end of this week. Also, Phillips 66, Excel Energy, Auto Nation. Did not mean to do that. So, yeah, that's what we got. That's what we got. A ton, man. A ton of data this week. Let's go into it. First things first, let's talk about the SPY. If you guys could, if you guys are new here, do us a solid. Hit the like button, subscribe, share, like this stream. I'm going to give you guys a little bit of information on the on earnings. Just want to give you guys a couple of stats here. All right, so I was looking at a couple different things here. So for Q3 2023, with 17% of the S&P 500 companies reporting actual results, 73% of that 17% have reported positive EPS, positive earnings per share surprise, and 66% have reported a positive revenue surprise. Again, we've just gotten mostly banks. Banks are getting liquidity from the Fed. Therefore, we kind of know how that's going. All right. So, revisions. So, September 30th, the estimate year-over-year earnings decline for the S&P for Q3 was minus 0.3%. 5 sectors are reporting lower earnings today compared to September 30th due to negative earnings per share surprises and downward revisions to earnings per share estimates. Q4 guidance. So far, 7 S&P companies have issued negative earnings per share guidance, and 6 S&P 500, 18.7, but above 10-year average. Have issued positive earnings. So 6 instead of that 7, which would leave us 17. So that is some really cool, which I should show you guys this chart. But a forward 12-month EPS would put us at 240 on the S&Ps. This would be, that would put us to 40, what is that, 437, 30. So EPS is pretty much lined up with this double bottom on the futures. So if you guys would like to see this, maybe I could show you this. But this would be, now I have to pull up OBS. See, I didn't transfer this onto my phone, but so that is EPS matching up with price action on the S&P futures, right? S&P futures, guys, we put in a really nice double top at that 100-day, 50-day moving average. I kind of missed that. I had a clue that we were going to come down. And what you also might see, guys, is a lot of people are talking about, and I have some more data. We can talk about a lot of this stuff as we go on the week. I want to get into some charts right now. But again, I'm going to show you something on the SPY, give you guys my thoughts on that. I'm going to give you guys a sector that I'm really, really looking at because I think there could be some really good opportunity that I will more than likely, if I get the chance, anytime, even as of tomorrow, I will be putting on a very small bet, and I'm going to get some time with it because if things are going to happen, if this thing goes, again, I'm going to enter when I should, right? If I'm going to get short, it's going to be short into bounces. If I'm going to get long, I'm going to get long into pullbacks. Again, like I was saying, the dollar is trading sideways right now. or has been for the past few weeks, right? A bit of uncertainty. The that euro data that we're going to get is what I think could possibly move the dollar. Okay, is what I think could move the dollar. All right, and I think we're going to get that with whether it's interest rates from the ECB, or if it is just, I don't think it's not going to be earnings related. If we look back here on a longer term time frame, let's see if we have, we do have a bit of resistance up here, right? So we could go higher. We could get a nice bounce. We are what? In an uptrend, right? We are in an uptrend. So we've had this nice put. And you notice how this has pulled back, and looks exactly like the dollar ripping. If I pull up the Dixie, right? Look at that uptrend, right? Look at this uptrend. And then look at that downtrend, right? Let's see if we can get a bounce to get this dollar to pull back. But what I was looking at, let's go look at this. You haven't, this is your inflection point up here at 1.1. I feel like this would be our watch, guys, right here. Sorry, I know I keep moving it around on us, probably giving you a headache. Let's see if we can get back to that area. All right, we have a nice double top up there. Doesn't look too great, right? Doesn't look great at all. But I feel like we have to hold this level, guys. And it looks to me like we don't want to. And that's a shame, because that means the dollar's going to go higher. That means the dollar's going to go higher. So if you have anything market moving, right? You see if you get news or anything and you're just curious enough the market's actually going to move, go look at currencies. If currencies are moving, it's a big deal. Pay attention to the data. Feels like it wants to pull back. It may pull back up until the data, but I am not ruling out a bounce in this and a pullback in the dollar. I know I hate to go against the grain, but even getting up to this 38.2 fib at this 1.07 mark would get you back up into that resistance area, right? Would get you into this area here. I can draw you a line if you need it. All right, that would get us right in here, roughly. All right, would get you right into this area. Oh no, I didn't mean to do that. Shoot. There we go. Let's just go back. So, I will say we have some negative divergence on the daily chart, which is a bit helpful. At least it's something to help you with that thesis, that the dollar can pull itself back and the euro can climb a bit higher. Let's go into some charts. So here we have the ES. Let's go into the spot. Let's go into chart. If you guys have any charts, throw them in the chat. Anything you want me to look at, pull up, give you my thoughts on. I absolutely love to do that for you. Let's go to the SPY real quick. I think if I forget what it is, if I put like a minus in there. So a lot of people were talking about an inverted cup and handle on the SPY, right? Let's see here. See, it's hard for me to see it. It's hard for me to see it in a sense, because I see more so a head and shoulders, right? Because if you're saying you have an inverted cup and handle, I could say, okay, well, here's your cup, there's your handle, and there's your pullback, right? So here is a cup and handle that I see forming that could be very bullish. So that's what I'm going to look for, right? I want to look for a bounce in this area. I'm going to take you back to the S&Ps. But this is what they're talking about, right? This is what they're talking about here. Right here, see, I can't really draw curved lines. I don't think on Thinkorswim. I can't. I don't think I can draw curved lines. That's which stinks. But oh, here it is. This is it right here, guys. So this would be your inverted cup and handle. Okay, this is it. This is a longer term inverted cup and handle from what they're saying. What some people are saying. And you're actually getting it on a lot of other data sets. You're getting this same pattern, right? To back it up with. So it's not a bad thought. Now I'm going to tell you my year-end thought process. I don't know where we're going to be. I'm just going to say that right now. I do think we're going to stay in this range for quite a while. And I do think, if you see anybody talking about getting anywhere past 360, if we do, something is going to be so bad. And I think even if it's that bad, I just don't think the market is going to give you an opportunity to buy the S&Ps at 360, 340 even. If you guys were not trading the day of October 10th, which is my sister's birthday, I'm pretty sure it's October 10th or the 8th, 14th, if I'm right, 13th. Okay, you had a 20-point reversal in the S&Ps. Let's talk about what's going on while we're going into this. I was just using TradingView, so there for a second I forgot how to use Thinkorswim's charts. You had a 20-point reversal on this day. 348 to 368. 20 points in the S&P one day. I traded it 3 times along with Tesla. I traded it short and I traded it long 2 other times with the long on Tesla as well. So here would be the top of the cup, okay? This would be the curvature because I don't have tools on here, I don't think, unless somebody wants to show me how to be able to do it. Fibonacci fans, cycles, blah, blah, blah. So look, this would be your cup right there, okay? And this is your handle, is what they're saying right there. And now we're getting that, that volume pullback. So I'm going to bring it back in on a smaller time frame, right? So this would be the cup, the pullback, and then the drawdown. And what they're also doing is they're measuring it, right, from top to bottom as one would, right? Okay. And they're saying low 300s, high 200s. I don't know if that market gives you that. I really don't. Let's see where this is at. Well, this is crazy. Well, that's crazy. 230, 240, 300. Maybe that was a little off, but I don't see it. I don't see it. I really don't. I really don't. I don't know if we get down to 300s, guys. I just don't. I think if you get anywhere near 360 to 350, you got to think about buying something. Something. If the market ever graces us with a 350, I will be both hands piling in, buying as much of things as I can. Nobody knows where the bottom's going to be. Nobody knows how this is all going to play out. This is part of the fun, right? But I will be buying it when we get down into those areas. All right. Let's talk about this week coming up. I'm going to go over some stocks with you guys. So I had said last week that we had a low volume area in here, right? This is a daily chart. I'm going to leave that up because we kind of need it, but we kind of don't. All right. This is our middleman here at 425. You could call it 430. You could call the middleman technically up at 430, right? Whichever one you want to use. 425, 430. I think, and I had a drawing set that I think this is where we're headed to 415. I think we're going to 415, 416. All right. We did not hold the 200-day moving average on Friday. We broke it. Let's go into a 15-minute chart, 30-minute chart. Let's go give you guys some levels here. Tomorrow, I'm going to want to watch a pullback. So you already kind of had, I think this could turn into, we had a low volume double top. I said last week, I said how low the volume was last week up past 430. So if I show you guys this, let's go to a 2-hour chart, okay? And we can pull it in right there. Let's raise this up. Let's raise that up. And this is hour volume to the median side up above that level. Okay. This is up above it. So let's go here. This is what you have. Your majority of your candles are right there in this area. Now let's go below it. Look at all this volume. Right? You had a nice volume bounce to get inside it, to get up above 430 and continue higher off of 430. You guys want to pay attention to things like this because it really will help you understand, like, man, this is a really low volume bounce that I'm not digging. Let's see how that looks. I know it sucks, guys, with the colors and stuff. Look at all this sell volume, guys. Look at all that sell volume. What did we get when we broke it Thursday, Friday, and into Wednesday? Look at that selling. I said it last week. If you can just know this stuff, you don't need a volume profiler. This is your volume profile. You knowing, like, man, this volume is really low up here. Low volume double top, not too good. Might not want to hang around long, okay? If we think the dollar's going to bounce, if we think it's going to bounce, it doesn't look too good, but I think it can. But it may not come until end of the week when the ECB does their interest rate decision and their monetary policy stuff figured out and actually done. So everyone thought that we could bounce. Again, remember back 2 months ago in August. Remember this rally here? Remember how everybody was talking about, you know, a pullback to 420 is not a big deal. We should pull back to that area, right? Well, why is it all of a sudden like more scarier? Well, it's the obvious, the war, right? That's one big one. That's one caveat that we didn't have, that we didn't have that much. Why we didn't have that much fear in the markets. And I'm getting into the earnings. I'm getting into that chart. But now it doesn't seem just like a minor pullback here, does it? Right? Am I the only one here that feels like there's a little bit more going on? Because you had a House Speaker. We don't have that right now. We have a debt ceiling that they have to get figured out. They have to raise it, do something. They have to do something. Or the government is going to shut down. That means data points. A lot of the data that we get every week, we're not going to get it. The Fed's not open for business, right? If that doesn't get resolved. Not sure what happens abroad with what's going on around the world. The obvious, you know, people aren't going to get paid, I guess, and things of that nature. So there's a real chance that things are going to start getting a little fishy, and this provides volatility again. So we start pulling back into it, right? And it was like, it's normal to get a decent pullback. You know, we went so far so quick, blah, blah. Now things seem to be a little bit different because of what, you know, things that have transpired. I want to look for a low volume bounce on the SPY, right? A low volume bounce to try and see if we can sell this market off even more. I think we get a consolidation on a lot of the market. I also feel like is going to depend, one, more importantly, the data. Two, it's going to depend on Microsoft, Amazon, what else? Meta, right? It's going to depend on these earnings and core PCE, unemployment. So you're going to get days where we're just going to have big up moves and big down moves because of the data sets that we're getting, along with earnings that are coming out. So if you guys noticed anything, and I said this in chat, right? You had Tesla. We had Tesla earnings, right? You had Tesla earnings. It fell on its face, all right? No big deal, I guess. But what happened was Netflix outperformed. Netflix outperformed, but what did the SPY do? The SPY did not break above 430, guys. And off of such good news from Netflix, why did the SPY have trouble breaking through 430, right? And it also didn't necessarily sell off like crazy with Tesla earnings. Look at that outperformance on Netflix. Again, yes, we can bring up the weighting factor into this, but I took notice that the SPY, when Netflix came out, on Wednesday, I think it was. Sorry, I'm just trying to get to it. I know I'm just going and going and going, but these are things I want you guys to notice this week, right? Right here. It again, this, you have to watch this, so that's Thursday. It was Wednesday. All right? It was Wednesday. If I give you guys a 5-minute chart, you're going to see that it didn't really care when Netflix killed it. And it wasn't like Tesla was terrible, but it wasn't good. But it wasn't bad, but it was kind of bad, I guess. It was bad. It was bad. Let's just say that. It was bad. The uncertainty is bad. So Netflix couldn't make up for it to get that SPY to like start having some type of, bounce attempt. Right? Because you've had banks do good. You had Netflix do good. Okay, you've had Tesla do bad. Apparently, market didn't care. Market did not care at all. So I want you guys to take notice on how the market moves to what earnings come out. Let's say if Amazon comes out and the market's just sitting there flat and Amazon's ripping higher and the market's just sideways, right? Google, right? Microsoft. Let's just use Microsoft as an example. Microsoft starts going higher. They've done really well. They're raising guidance, blah, blah, blah. Year-end guidance is up. They beat bottom line. They beat top line. And the market just trades sideways. That tells you everything you need to know about the direction of the market. All right, so if you haven't paid attention to something like that, you should. You can start to put that in with your thesis of the market. So I'm looking for a bounce back on the SPY, and the area I want to see the SPY get to, I'm really uncertain about the markets right now. I want to see if we can get a bounce back to 425. All right, that's where I'm going to be watching. I'm going to be watching for a bounce back to 425. And I'm going to see if we sit in this area and wait for earnings and wait for catalysts to show up. Okay, let's run through these charts. If you guys have charts, throw them in the chat. If you guys want to say how the stream sucks, say the stream sucks. Give me a like, subscribe if you haven't already done so. That allows people to find this stream and be able to come here, hang out, ask questions, go through charts. You know, we trade live every day, free 99. We do not sit you guys through sales pitches. We're here to help educate, right, and become a better trader, become a better person. That's the whole purpose and goal here. I will say this, so thank you for that, for liking and subscribing. It really helps the stream out. Been doing this for close to 10 years now. I'm going to tell you right now, I'm going to come in on Friday or later this week and say, if you weren't trading with us, I'm going to say I told you so. That's all I'm going to say. We did, but we did not make this 425 area resistance. There's still another target zone that I'm looking at that I felt like we didn't really make resistance. And that's going to be up here at 429. This bottom of this Fed day here. Let's go to a 5-minute chart. I want to see if we can get back up to 429. It just may not happen for another couple weeks. That's my only concern. You have a double top here, pre-market high, initial bounce off the open, rejection off that pre-market high, and we pulled back Friday. We're coming in with a gap up. Let's see if this 200-day holds and we get a low volume bounce back. It's also going to depend on earnings more so. You have Microsoft Tuesday after the close. If Microsoft reports good earnings, we can get a nice little bounce until we get to initial jobless claims, GDP, PCE, which comes out Friday, the data points along with Meta, and then Amazon comes out Thursday. So we can really game plan for if this, then that, right? Microsoft has a pretty good earnings. Okay, we got Netflix, Microsoft, Tesla. Is it just the automotive sector, like credit, right? Again, Verizon, GM, Ford. You're going to get GM and Ford's shutdown thing, but this is credit, right? This is being able to afford liability or assets at rates on where they're at. And do people even want to do that, right? A lot of people just do things. They don't think about this. I'm going to tell you right now, believe it or not, the majority of people do not think about when they go to purchase a home, if it's the right time to buy. Are they paying $1,000 more a month than their neighbor? If you bought recently, you did. And you are. And it's a shame because a lot of people should have somewhat of an acknowledgement like, hey, you have the down payment. At least wait for asset prices to come down because that's where we're at right now, right? At home asset prices are still really high comparative to where rates are right now. And that's the problem we find ourselves in. So the S&Ps, I want to see if we can get back to 429. If we cannot, I'm going to look for 425 for me to think about another pullback to the 200 day. We'll see. A lot of my trading week to week, I'm going to focus on company names for earnings. And then I'm going to wait to trade the overall markets. Or at least, because again, we could come into news at any point in time in our trading day. What is this? Is my charts messed up? Do I have two? Oh, okay. I'm sorry. I didn't know what that was. So we have, we have a chance for a lot of volatility, guys. Right? You could come in tomorrow and Iraq could do something, not do something. They said over the weekend, Lincoln came on and said, we're on high alert with Iraq pretty much. So there's another catalyst. The market comes in with the gap up, kind of just sitting there. I think Monday could be an inside out day if we have no news, right? Maybe some particular stocks that either report earnings or you had some information come out over the weekends, which we could actually look up right now. I want you guys to know Thursday, before we did this sell-off and stuff, I told you guys that I wanted to get up to this level on that Fed day, and we got there, and I did not go short at that moment. I did after we pulled back off of it, but this, like guys, Thursday, I set this target here just to give you an idea, right? You come trade with us. I will let you guys know what it is that I'm thinking about doing before the market opens, before the stock does what it does. I tell you where I want to be short, where I want to be long, and where I'm going to be taking profit before I even make the trades, because I have a game plan. I trade with a plan. If the trade changes, something about that plan changes according to what's going on with the chart or news or whatever, what have you, either it's not a play anymore, or I will come on the mic and we're talking all day, and I'm going to tell you, hey, this is a game changer. Like, things are changed now, right? I was expecting resistance, at this level. It's not resistance. It's broken through it on an increase in volume. We got to change things up. That might actually start to be an entry point for a long, right? Things like that. So had a decent day, Fed day, made some money. I didn't make it was no big home runs last week. Friday I had a doctor's appointment. I turned the stream off early. I was just a little frustrated with the way the stream was working, how I was doing, and psychologically this kind of made me realize, along getting used to, doing this stuff and trading with you guys live. But it's all good, right? We get to a level. Oh, this was we're going into earnings and charts right now, but I want to give you guys a lesson real quick on AMD. AMD, I came in Friday and I said, this is where I want to get short. All right, let's go. We're on a 5-minute chart. I was using a 1 minute through. I use all different time frames. Okay. There was a double top on AMD and I kind of missed it. All right, and I'm going to explain a couple things to you guys. So I came in the day and was looking, even the day before, right? Even Thursday, right? What was it, Thursday or Wednesday? I said 106, 106.50. I have to look on my thing. It's probably right here below me. Below me. That's what she said. 107.57, right? There's this one. It's 106.23. So this was earlier last week. Yeah, right there. 107. Look at that. 107.49. I have written down 107.57 right off of that 100-day moving average. You put in a double chop, but you traded sideways that day. So AMD was on the list. I feel like you had this extension on AMD, and you've been in a downtrend. Obviously, you're in a downtrend. But every time AMD got these pops, right? You'd pull off the bell, or you bounced off the bell. And I said this in chat, guys. So if you come join us, you'll hear me say these things. You've been seeing this pullback. You'll get that bounce, and that bounce has been shortable, right? You bounce, pull it back, right? What do? You bounce, shortable opportunity. It's a little wicked there, but it's still overall in that downtrend. What happened Friday? You bounced, you pulled it back. But look at this level, right? This level has been holding at 101.75, 101.50, we'll call it. Okay? Look at this level there, right? That's a key level that if we break it, we're going to go to 99 to 100. So I did not short off the bell AMD like I wanted to. There's a few reasons why. Because I looked at AMD and I said, okay, my risk, I guess if we would have looked at it like that, I felt that there wasn't enough meat on the bone, right? I felt like there wasn't enough meat on the bone when in fact there was, and that's my fault. The overall markets were pulling back, and thinking back, AMD has been getting these bounces and they've been shortable. I felt like I missed the first bounce, and I was waiting to see if I could get short in this area, in which it gave it to me. And again, my problem last week also was I was looking at too many names. You gotta watch, if you find yourself looking at a ton of names and you're missing things, pull it back. Like, realize what it is you're doing physically to help yourself. I try to do that to myself all the time. I felt like the risk to reward wasn't there, because I figured 104.50, 105, 104.50 was the area I wanted to get short. We never got there, but I did see this after we pulled it back off this level right here at 104. I said if I could just get it right back into this area, I would short it. I never took the short because I wasn't sure if it was going to give me the follow through I was looking for. But it did give us a nice trade. Put in a nice little double top. I guess you could say there's a double bottom there too, because you don't, after that rejection off of that candle, it's time to get short. Candles tightened up also. Bunch of little bear flags going on there. I just wasn't sure if the risk to reward was there, guys. That's why I did not short AMD, but I did. After the stream was over, I scalped it. I scalped AMD, I think, twice, and the SPY 4 times on Friday. 3 times, maybe. Or I scalped the SPY 3 times, and I hit AMD once. I think I hit AMD twice, though. I'd have to pull up my order book and give you guys the timestamps for those. I just felt like the risk to reward that I wasn't getting enough. I didn't think that there was enough downside to start getting short that name just yet. Because the SPY was coming into an area where we could find support. And if I'm trying to get long a stock that's bouncing while the market's pulling back, even though I know so far in the past that these bounces have been shortable, I just was turned off on AMD. Like, I just felt like I was trying to trade just to trade, and I didn't think that there was enough movement there for me to take, advantage of for the trade plan that I wanted. And look here, guys, right? Friday, it closed 0.5%. That's nothing. You want to see AMD 2, 4, 6% down or up, right? So that technically was a good decision that I made Friday. Why I did not take that short, because I was caught between my risk and my reward. I felt like the reward was not worth the risk, and I feel like that reward is a break back above this area or a break below 101 to get down to the low 90s. But it's been fairly strong. It's not been strong, but there's a clear technical support area we're coming into at 100. It closed at 101, so I'm looking at what? To give my risk $1.50 to trade a $2 stock, right? That doesn't make sense to me. I'm going to give it $1.50, and I'm going to get $2 out of it. I don't really like that, right? I don't really like that. That's not what I'm here to do. I want to catch nice, decent days with a nice technical setup. this does kind of look good, right? This does kind of look good here, right? You bounced, you pulled it back, you got that bounce, and bang. That would have been a good swing trade. Like, this is something I can get down with. Here's a bounce into the 50-day. This red line there is our 50-day moving average, and it's been rejecting it. It's been rejecting bounces the whole time. So this is a key support, a little bit of a support area for AMD. I feel like right now AMD is kind of just, there are trades to be if you want to just trade it, it's pretty liquid, but I feel like maybe you get it kind of just sits here, right? Because that's going to allow the 200-day to continue to rise up into that $100 level, 99.50, right? 99.50 to 100, and then get a bounce off of there, right? You've seen it done. It bounced off the 200-day moving average here. It bounces up, and it just feels like it can't get no momentum to the upside, but it also doesn't want to just flush to the downside either. Right, there's a bounce off the 200-day, a rejection off the 100-day. See if we get another bounce off the 200-day and try and take it to the 50, maybe the hundreds. I'm really curious what happens with AMD here. I feel like it's at an inflection point where do earnings start to come in when it reports? It's probably not until December, 10/31, so at the end of November. So that was Friday's trade that I didn't take. I did take after the stream. I scalped it. Right, but I felt like the risk to reward really wasn't there. Let's get into these earnings, guys. I'm sorry that I drug you guys on for so long. I gave you guys a SPY, the Euro, ECB rate decision, GDP, jobless claims, PCE, all that fun stuff. All right, consumer sentiment, 5-year inflation expectations. We got that. Move. I want to show you guys something. Got to show you guys. There was something else I want to show you guys. So if you guys want to have like something to trade, like not arbitrage, but what moves hand in hand, right? Okay, I'm going to show you guys something here. Okay, because the bond market has had so much volatility. Now I've been long TLT a few times. Right now I still have a small position on TLT. It's later dated, but I don't look for that. It's not time for TLT. The bond market is just it's flipped upside down, literally. So this is the S&Ps. Let's go to, I'm going to show you guys something. So what I'm going to put in here is the option volatility in the bond market. Okay. I want to change that to a line. Hold on. Let me click this. Visual, boom, boom, pin scale, boom, boom, object tree, I think, settings. Let's see, candles, because I guess it saved it. Let's use a line chart. Okay. Let's go to settings. No. I want to make it, bigger, guys, that's all. Alright, settings, let's make this bigger. 100. Let's do that. I like that a lot better. Okay. All right. Let's reset the chart. Now I want you guys to see something here. All right. So why is... Oh no. So it took the SPY and made the SPY a line chart, not the bond market volatility. That's not what we wanted. I should have just went right there. Oh, no, it is. Okay, cool. So let's go to like a hourly chart. Why is it locked? This is so weird. No. You gotta be kidding me, man. Oh my gosh. This is so weird. Alright, so let me... This is so weird. Why is this... So, I'm sorry, guys. I don't know why this is doing this to me. I really don't. I don't know why it's doing this to me right now. Alright. Let's go here. Let's pull this up. It wasn't letting me pull it up. I don't know why it was doing that. Alright. So, as you can see here, and I don't know why it's starting to do this to me. I really don't know why. It didn't do it to me this weekend. Right? It did not do it to me this weekend. So, I know you guys probably can't see this, but there's got to be something going on because I don't like that it's locked. Settings. Let me make sure that some percentage value. Man, this stinks because automatic scales play. I'm not sure what's going on. All right. I wanted to be able to show you guys because if I were to pull this up, you can see here where the markets and the bond volatility toward versus the market. You know what? Let's try this. Let me try this, guys. Let's try this. I know I'm taking forever, and I apologize. But I know it was the SPY I used. I know it was. I know it was. That's so crazy. Yeah, it was the SPY. So what happens is you get movement out of these. Like, see, the SPY is just flat. You guys can't see it, and I don't want that. I'm not sure why it's doing that to me. I'm not sure. Like, you can't see the vol. See how it's so small? Like, I was able to move it this weekend. Something's going on here. So you can see here the market pulls back. I don't know why it's so flat. Oh, man. If anybody could help me, let me see. Yeah, I don't know. Something's going on here. All right, so that stinks, man. That sucks. Anyway, this chart I wanted to show you guys was options volatility. I'll have to show it to you another day because it doesn't want to work for me right now. Unfortunately, right? Unfortunately, that sucks. So I was going to show you guys that, and it was really cool because it showed how you would get that option volatility in the bond market, and then you would see that move. It happened right after the moves in the overall markets. Not sure what's going on with it. I don't know if it has to do with after hours or not, but that's a shame because I was really hoping to show you guys that. Same scale. Yeah, it's whatever. All right. We'll not worry about that. All right. So, low volume double top. We have some really nice increase in volume here on the SPY. Let's go into some earnings here real quick. 152. Let's go to the daily chart here. So Spotify comes out. This is going to be one of my first plays. That'll be Tuesday morning. It comes out. So, which fortunately Tuesday morning we can trade this during market. We don't have to wait too long for this. Spotify, GE, okay, yep. So Spotify, this is a really good setup. This is one of two that I really like. All right. And I apologize for that. I was really hoping to show you guys that. I don't know what's going on with the chart. Something has been pushed to where it's not letting me do what I need to do to show you guys something you would be able to see and not necessarily, it's arbitrage, right? Just like we had the dollar move and you could the dollar would, go right as the dollar's starting to pull back and then, okay, let's just get long the markets, right? Arbitrage. In a sense, it's like it's not 100%, but when you find something that works, that's having an advantage, right? Having an advantage in the markets. You have a major level here on Spotify. We're at an inflection point that we held. 150 support. Let's go into it. Support 2, minor, support 1. 146 to 145.50. Okay. We broke below. Look at this consolidation. This is the first time since you've consolidated where you've had 3 consecutive days out of that consolidation, and that move has been to the downside. It did close green Friday. You closed green Friday. Keep that in mind. It could be because of earnings, but this was green while the overall markets were red. That's something to keep in your mind. I think there could be a pullback here. You have a major level of resistance above you if Spotify does well, up at 160. But you also have a really big level of support down at 130, right? So Spotify, to me, depending, if they come out with earnings that gives us a decent enough catalyst, there's movement there, right? And we're just going to play it range by range. You have that gap fill that it could not hold. It fails, right? So what'd you do here? You consolidated. Couldn't break up and out of it, so therefore it's probably going to the downside. It sat at that 100-day moving average, and what else do we get? Look at this. What do you have right there at that level? Look right there. There's your 200-day moving average coming into where? 140. Coming into 140. So I think this is one of 2 trades that I'm going to be looking at this week depending on earnings. If it can just give us a catalyst that, all we need is sellers or buyers to step in because of pretty good guidance, pretty good beat, a raise in guidance, or the exact opposite of that, and we get a sell-off, take profits. What I want you guys to also know when we start going into playing these earnings plays is understand where the stock is year to date. Year to date is going to give you a sense on if the news is bad, they're up X amount because they're in this thing from early in the year, okay? And this stock is up early in the year. And right now, as of Friday, you're up 85% if you would have bought this the first of the year. So think about anybody that bought this near, at, or around the first of the year. This is year-to-date high and low type of thing here. It's something you want to just pay attention to. Because now with this insight, we say, it's pretty bad news. Chances are, whoever is up, I don't care if they're up 25, 30, 40%, 50%. They're probably going to, institutional money is probably going to take profits on that. Daily chart here, we have, again, that was 83% year-to-date, and that's up right now. That's not including all this going on. That's what I mean. A lot of these stocks this year have went up a lot. If you'd have asked anybody, how much do you think cruise lines are up this year? They would not know that they're up over 150% on the stock alone. They would not be able to guess that, I'm sure. So we have this 200-day moving average coming into place. You broke the 100-day moving average. What did we do there? What we did was we bounced off the 50-day, wasn't right at it, but you'd have to look intraday here. You sold off. You gapped up above the 100-day. You played around with it. You held it. You got that bounce back to the 100-day to make it resistance. Then you come in with a gap down. Now we are below. We broke below. Turn that 100-day into resistance. Now it stayed at that 50-day for 2 days. We've now broke below it. Friday, it bounced back to the 50-day, made it resistance. I want to see if these earnings come in not so hot, whether in line or lowers guidance, whatever, what have you, because of cancellations. Maybe we start hearing about no new subscribers, cancellations. People's money is getting tight. Therefore, they want to stop their subscription, go with the free one, blah, 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 blah. Let's see if we can get Spotify back down here to 140. Just this trade alone, if we catch it correctly and it is not taken from us, okay, as of Friday, that's a 7% move. But anything bigger than that, you are looking at this 130 level, which is a very key level. First, we got to hold 140. All right. I don't know if it's going to be good or bad, but if you had to ask me what the market thinks, it looks like they're getting ahead of this earnings and they're selling into it once again. Down this, guys, we called this. If you weren't here before, I told you this. 1, 2, 3, big gap down. If you looked at the weekly chart and then looked at the daily chart, you'd say, whoa, they're selling this thing. Let's just see. This was the first stock that I took notice of. They sold into it. The setup was bearish, not just that tail there, right? But you made that area resistance that was support. If I were to bring it up on a weekly chart, because even just using the moving average, you would have seen like, hey, this isn't looking too hot, right? This isn't looking too hot. So, that's, I'm going to give you guys the levels again right now. I do apologize. I'm sorry. I am new at this, so you have to forgive me if you can. If you guys could do us a solid, if you guys could hit that like button, subscribe, but even hitting the like button to let some people find us. We trade here live, free 99. We don't charge you anything. We don't make you sit through a whole bunch of sales pitches. Here for good, solid information, trading information to help us, get on the right side of probability and find opportunity, because I'm only one person. You're only one person. We group up as a team. That's the community that we're building here. We as in us. 150 or 160 top end. They come in good, a surprise. You could look for that gap fill, but it hasn't been filled. To me, if you see on a daily chart, if I were to draw this here, tails to me is not a fill. I want to see a close at or above for me to say that that gap has been filled. All right. But the upper end of this range is at like 160, 161. You would look for the break above the 50-day, catch that pullback, a bounce, and get long and take profits on your way up to 160. My thoughts are to the downside. I want to see if I can get a balance if the options aren't too expensive. Maybe I see if I can put one on before so. And I will act like if I do that, I will be satisfied with losing all of that money, and it will be a very small position. I could just be smart and do spreads. I more than likely am just going to wait until Tuesday morning because they report Tuesday morning. That's going to give us some nice volatility to start the week. You also have GM. I think Spotify is going to be a good stock to trade here. Some of these tech names can get real fun, and they give you nice setups. You'll have initial morning lows, pre-market lows, right? You'll break it. You'll pull back up. Initial morning low is resistance. Like nice, clean. VWAP is lined up with initial morning lows from pre-market, and, you take that short. Like CRM, these are some names that can give you some good opportunities. So sorry for rambling on. Spotify is one of them. That's one that's on the list. Let's get into Microsoft real quick. Microsoft has been in a huge consolidation. And I gave you guys the levels, right? And we're looking for that 200-day. Right there around 140. If we are to break it, that 200-day moving average, look for 130 to be your final support area. Top end of the range, 160. Bottom end, 140 to 130 on a really bad earnings call. Give me 1 second. But let's go to Microsoft, okay? All right, Microsoft has just been in a consolidation, trading sideways. You have a double bottom. It's, to me, Microsoft's consolidating, and you have lower lows and lower highs. Let's just start off with that. You have a ton of tails up here at the 100-day moving average that you tried to hold, right? Bounce below it. You get back above it, right? You gap up up above it. You put in that tail up around 335 resistance area. You hold it, you hold it, you hold it. We broke it Friday. We broke it Friday with this hammer candle, inverted hammer candle. I want to see if we can get this thing down to 309. Right? I want to see if we get some minor support here at 320. So what I'm going to look for on Microsoft leading up into the earnings, you clearly held the 50-day moving average on Friday. You did not close below it. We did not close below the 50-day moving average. This is key, because what's that going to allow us to do? We could look and see if we think we could get a small bounce off the 200-day moving average for like a low volume, like Monday, Tuesday type of bounce, right? That would give us a bounce to the 100-day moving average. Then we would look to turn that 100-day moving average into resistance, or at least get back to the 100-day moving average and have earnings that day or night. You guys see what I'm saying? So depending on how much the options are, I'm going to look to see if Microsoft, if we can pull it back into 325 tomorrow, see where we open. If we open with a gap up, right, we have a small gap up. I'm going to see if I can wait for that pullback. Bounce off 325, right? Get long, take that, $3, $2.50, take my first profit, $3, $3.25, take another piece, take 25% off at a time, or however you want to do it. And see if we can just get back up to that 50-day moving average and turn that moving average into resistance. That'll be this blue line here, right? We broke it. You see it bounce end of day, right? Towards the end of the day, it did bounce off the 50-day, right? If it closed here below the 50-day, that's a sign. It's a sign that it held and bounced off of it. So there are buyers down here. So until we have earnings, I want to see if we can bounce it back up into this area of 330. Overall, I want to see if earnings aren't that great, and not, if earnings aren't, if they come in good, right? Are they good enough to take us to the highs? That's where I don't think Microsoft is going to, I don't think any stock is going to do that. Because I think you have the holiday coming around, where you're really going to see if the consumer can send these stocks up to really, kind of set them up there. Now, do they report where things are good and we kind of just get up there and we're there for the season, seasonal things, and Q4 comes in and we get Q4 earnings, and that dictates, okay, we're not going to continue to make highs, right? Just have to wait and see. Right? There's a lot of government spending. The labor market is super tight, so the people have money to spend. Can't be too bearish. You can be a little bearish, but you want to stay neutral. I'm staying neutral. I'm just going to go off the chart. Lower highs, lower lows, consolidating. Looks like to me it's waiting for earnings to dictate the directional movement. All right? Look what happened last time with earnings. You had a nice continuation. So here is earnings, and you got a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. You had a very nice move in 2 weeks. You got the movement, right? Here is earnings. There's the move. I know you guys probably can't see that, but that's my point. There was no consolidation. You have to be able to sit through the bounce backs, even on a short. There's the move after earnings, right there. What's it doing now? It's sitting sideways. All right, let's go to the next one. Snap. I didn't write much down for Snap. Snap did have a decent day on Friday. I have a guy sitting here with a golf ball and it's just sending it off this cliff here. We'll see what happens. So, because we talked about Snap before this, it was like back here somewhere. My goal with this was to say, let's see if it gets the bounce and starts to roll over. What's it doing, guys? Yo, what is it doing? Where are you? Whoever asked me to look up Snap, not sure if it was Bingo, not sure who it was, but what is it doing? It had the bounce, and look at those tails coming in with a Friday close red. Looks like the circle bounce, because I took 1 or 2 off. Bounce, roll it over. I try to help people with these things here, and I'm not sure if they're hearing me. It was off of this candle is where we were doing it. Or it was this one. No, it was this one. It was this one right there. It was that one. It was that candle. It was that candle right there. I said I want to look for a bounce and then a rollover. So that's funny. Come on, dude. That tells me it was it because there's like 4 or 5 different candles there. So I didn't write down much for Snap because there's just, I'm going to play it, but I want to see what it does leading up to the day. Because look at the moving averages. You have the 50-day cross below the 200-day. The sell side volume technically isn't there. It is, right? It is, but it isn't. Because you get that golden cross to the downside. Not golden cross, that death cross. And then, here we are in volumes picking up to the upside. I don't know if there's news or whatever. It's just all your moving averages are right here. So therefore, the stock is not allowed to move up or down. There is something I want you to know about $5 stocks. About, there are rules about certain institutions being able to own stocks, if they can or cannot. Majority cannot own stocks cheaper than $5. Some can. So let's see what happens. I don't have much for Snap there for you. Let's go to Meta. Oh, Meta. I called that upside too. It was sitting there and I'm like, man, Meta feels to me like it wants to break out. Let's do this. All right, we're on a daily chart. So it looks like we have a small double top here, right? We have a small double top. And I feel like the market's waiting for earnings. Feels like we're waiting on earnings. All right. My thoughts are on Meta. I'm going to wait to play this thing after earnings. A lot of these names are going to wait to play after earnings. Spotify looks really good. And this other one I'm going to show you, it looks really, really good. I haven't went through Intel yet. Boeing's been flat on its face. I did do a little bit of Boeing. I don't think I wrote it down. Meta. All right. I want to see Meta. This could be a trade leading up to earnings. Meta comes out Wednesday after close, so listen, the options on these are going to be pretty expensive. I can tell you right now they're going to be pretty expensive. But I would like to see if we can bounce Meta into that 315, 316 area, right? I want to get Meta up here and see if I can get short. You have a small double bottom right here, okay? What you could call a double bottom right there, all right? I want to see if we can bounce back into, what is that, 312? 310, 312 area. Fridays or Thursdays close. Right? I want to see if we can get back up into Thursday's close and then pull it back to this 50-day moving average, which should bring us right around the top of this range here. Right around the top of that consolidation. I'm sorry, I'm trying to do the best I can here for you guys. I want to see if we get this 50-day to pull itself up a little bit and get here. Right, to get up to this like 305 level, which would put us on the upside of that consolidation. To me, it's in a very small uptrend. See, if I just breathe on this mouse, if I breathe on this mouse, it just wants to move. If you look at it here, you do have a wedge pattern forming, which is key because if you use volume in accordance with this pattern, it could be pretty bearish. Kinda. Okay. Look at this. All right. And there's, you see your 100 days moving up also. So this could be our little range. Whether it's a bull flag, I don't know. I think you may more so to the downside pullback. But they have some new products. I think, you're going to have to wait until Christmas season and see how these products do that Meta release. Meta has released a bunch of new products. If you did not watch their like Meta Day, I would go watch it. They have some cool sunglasses that you can do. You can live feed from the glasses. They have a lot of cool things. There's an upgrade to Oculus, a lot of other things that they had during that Meta Day. So I'm going to look for bounce backs again to this double bottom here from Thursday and into like Monday or the last Friday last week. Bounce backs to 312.50, 313. All right. 313, the high 312s. I'm going to bounce back to that high 312s and look to get a short and see if I can get Meta. Just looking for a couple dollars here back into the 50-day moving average. I'm going to look at the options to see if it makes sense. Right? I really want to see a decent move here before I just randomly get long or short before a stock reports its earnings. All right? Unlike the SPY, Meta is still hanging, has relative strength. So, if you don't know what level I'm talking about, 312.75 right here, guys. This area right here. And it did it Friday. It bounced to it. I just think we could get a little bit more. I want to see if we can get a little bit more, get another little bounce to like, yeah, I already told you. You guys know what it is, right? So let's see if we can just get a bounce and look for Meta to pull it back. It could consolidate on Monday, so I'm not going to be in a rush. I want to see where we open. There's other names I'm going to play. There's other news catalysts I'm going to play leading up to the earnings. I may just wait. So there's Meta. All right, this is it. So I want you guys to know what's funny. I had brought up on Twitter the transports, right? Transportation. Transportation has gotten a hit. All right, it's not coming up. If I pull up, let's go to Google. Let's go to stock market news. Let's go to images. News. Images. Nope. All right, so it's not doing it now. But what it did do was it brought up transportation. And I, for some reason, had it up and I X'd out of it. Right? Investor Business Daily. This is 15 minutes ago. We have these earnings, ServiceNow, stuff like that, which I'm still going to chart out and watch and look for opportunity. But it had brought up the industrials, or not industrials, I'm sorry, transportation, right? The Dow transportation is a key sector that professional money managers use to dictate the market direction. It has not done well at all whatsoever. Now, for some reason, it's not coming up. All right, it's not coming up. And what's funny is I brought this up, and then I go to Google, and then it wants to bring up Dow Transports. It came out October 30th for Investor Business Daily. All right, so UPS. Let's look at this, guys. This is one indicator that I'm looking at that says, watch out. You had airlines pull back. Watch Boeing. There's more, right? But, we can go on to say PacWest, but Union Pacific got a price upgrade, did pretty well. That's transportation. Well, let's wait. Amazon could technically be in this sector. Look at this, guys. Look at this area of support that you have here on UPS at $155. This 150 to 155 level is so key, and we have a bear flag forming on the daily chart. You have earnings on Thursday morning with CPI, durable goods. I want to see if this thing starts to break down, guys, because you do not have any support up until 123.50. And as of where it closed Friday, this is a or this is a 20% down move on the stock alone. This is a stock that I'm also watching with Spotify. These are the two hottest ones right now that I have on my list. And I like them because a lot of people are not talking about it. Okay, that's one. This is a monster base here. And this is a bear flag to me that I think we're going to break. And just like you've seen on Boeing, if you have not seen Boeing, look at Boeing's chart. Look at this downside on Boeing. And it's still going. There is a problem in the transportation space. And I'm telling you right now, when there is trouble in the transportation space, I don't care about copper to gold and dollar. Listen, when transportation has issues, that is good slowing. That is your sign to say, watch out. Here's the next leg in the bear market. I'm telling you right now. This is such an important level that just even the psychological factor that this is what institutional money managers really look at for market condition. You continue to get this going. I mean, Boeing still got a ways to go. UPS does not look good. All right, I can go down the list, but let's see what UPS does say. I'm not gonna sit here and speculate. I'm not here to speculate. I'm here to get information and receive the information. I act upon the information received. But if we continue to break this level and on top of having earnings right as we're at this level, chances are things may not be good. And I'm going to be looking to take this thing back down to the low 120s, which is about 20% away. All right. The rest of this week, guys, I'm going to come out with lessons, different things you guys and I myself can use to get ourselves on a better, more consistent path to success trading. I've been doing this for 10 years. The markets have allowed me to do a lot of things in life that I would not be able to do without the markets. If it wasn't for the markets, I don't know what I would be doing. I have no idea. If you guys enjoyed any of this information, I've provided you guys with a lot of information. If you could just do us a solid and hit the like button. If you guys have questions, you guys can throw them in chat. I'll be happy to answer them. I got to go over Amazon. We can do Intel. But it would really help if you guys hit the like button and help the stream get passed to someone else. See if they would like to be here and trade with us live. We do it for free. We don't give you guys sales pitches. The only sales pitch you get is a like. And this takes a lot of work, right? A lot of this information, a lot of this work takes me a lot of time to get it out. And I'm trying to help you become a better trader and just have more knowledge about the markets and what to expect, right? Let's see what happens with the dollar. I feel like if this rate decision with ECB goes the way I think it's going to go, I think you could see a pullback in the dollar this week and a bounce in the euro, obviously. But I don't know if that's enough to really save the markets, even though I think we get a light bounce. I think you have to worry about the labor market, number one. The labor market is the number one thing the Fed is watching, that the Fed wants to slow down. If the labor market doesn't slow down, higher for longer. That's number one. Number two, earnings. But I don't know how, it's just as a whole, right? Earnings as a whole. How many are just saying, yep, we're going to outperform. We're expansion, right? This is growth. We have a ton of growth. That's not the period we're in. All right. So we could be coming into a time where there is a buying opportunity for the long term. I think we're getting there. I think we're starting to get on that side of the market where we're going to start experiencing some downside. And when you do, you can make a lot of money. You can also lose a lot of money if you don't know what you're doing. But there is a possibility for traders to take advantage and make a lot of money with the volatility. You have to remember, anytime you're in a trade this week, next week, the month, until things are resolved between the house and the market and all the other things that are going on, you got to take your I would think about I'm not telling you what to do because I cannot do that. Think about locking in those gains and shortening up those losses, because you could just have a limit down and be stuck in the trade and being like, what's going on? We have a really good news feed too, by the way, that we play here, Squawk Box, that's really good. Right? It's better than some of the competition ones that you pay for. You'll get a you'll the Squawk Box usually will more. It has 90% of the time you'll hear it here first. Um, you guys have a great night. Let's go. I think we did do Amazon, or did we not? But if you guys have any questions, throw them in the chat, or I'm going to get out of here and go through a couple more charts and get busy. I got a big week. It's going to be very hard for me to sleep tonight. Amazon, pretty easy here. Other than earnings, I'm going to look for Amazon to see if I can get a bounce back. Same thing as Meta, right? You have a double bottom from Thursday and Wednesday. See if we can get a bounce back, and I'm going to make it easier on you to see it. There's a small double bottom right here that I'm going to be looking to get a bounce back and see if we can break these lows. All right, now, depending on what the market does is going to depend on what Amazon does. So if the markets start to bounce, then maybe Amazon starts to close that gap between where it's at Friday, where it closed Friday, and that 100-day moving average. You could find yourself going back up to 128.50. The first target I'm going to look for is 127.65. 127.65 is the first target I'm going to look at to get short. If I start seeing decent volume come in there, I will put a piece on, because I still think you could get a bounce into 128. 128, 128.50. Let me go to the daily chart to show you what I'm talking about. All right. So if you look here, you're going to see earlier in the week and late last week, you see this little support level here, right? Resistance, and that couldn't hold support. You came up, resistance, you broke it. What'd you do? Turned it into support. You bounced, you revisited it, came back, revisited it. So this area right here, 128.65, 128.50, we'll call it, to 128. It's a 50-cent range. I would put that short on a piece. If I start to see increase in volume come in at that level, if increased selling price action comes in at this level at 128, I'll start it. And then I'll give it that 50-cent move, right? I'm going to give it 50 cents to possibly take out this low and get down to 124. That's 50-cent risk to a $4 downside move. Call it 75 cents. Maybe I give it 75 cents to $1, right? That's a 4-to-1, guys. That's the risk to reward that I like to look for. That's going to keep me profitable. That's going to keep me beating the S&P year after year. That's going to keep me from losing less, right? The trade doesn't work. Maybe I find out quick. I get some volume in there. I get short, and I get a blast of volume. The SPY's turn around, and I don't even have to get to that 50-cent mark to stop out to know that I'm wrong, right? So, be careful out there. If you guys have any questions, reach out. Thank you guys for joining me tonight. I hope it was helpful. We'll go through a lot more stuff as the week goes on. I'm excited for this week. I hope you guys are too, because there is a lot of opportunity getting ready to hit you in the face. Are you going to be able to block it? Are you going to take advantage of it? Are you going to bob and weave and bring it right back? Let's go get it this week, traders. You guys have a great night. I will see you guys early in the morning. Let's get that game face on, because it's time. I'll see you guys in the morning. You guys have a great night. Thank you guys for joining. Like, share, and subscribe.